Hi traders, welcome to my video on the high wave candlestick pattern. In this video I'm going to show you a simple candlestick pattern that you can use to help you capture moves like this one for around 600 pips. Okay, so the high wave candlestick pattern is basically a candlestick which has high low and low wicks. So I will show you an example now. Okay, so this one here, okay, to show you. Can you see this candle? High wick, high upper wick, and long lower wick as well. Okay, so that's our high wave candlestick, and what we're going to look for is to trade a breakout of this candle, either in the upwards direction in an uptrend or the downwards direction in a downtrend. Okay, simple as that. The premise around it is that the candle will act as support in a downtrend or resistance in an uptrend. So you can see here, market, clear support level there. Market's making these higher lows. Okay, we have our high wave candlestick pattern. So what we do is we just mark the top of the candlestick pattern there. See this candlestick? And then we could trade on a breakout, and that would have been a good entry if we zoom out into this uptrend. Okay, stop loss we could have placed below the low, so just here. And for the take profit, I personally wouldn't use a fixed take profit. For example, let's just say you had a 50 pip. What would the stop loss be? 50 pip stop loss and 100 pip take profit. So you took profit around here. Whilst it would have been a good trade, you still would have left all the rest of this on the table. Okay, so what I do instead is I'll move the stop loss to break even. And then as price continues moving upwards, I'll just trail the stop loss below the lows. So below the low there, below the low there, below the low there, below the low there, below the low there. That way we can capture over 300 pips, if not more. Had we moved the trailing stop up here somewhere, or just exited once we've seen this bearish price action, the market starts to turn around making these lower highs. Okay, so I just think that sort of money management and without a fixed take profit ratio can give greater returns in the long run. You know, if we have a loss here or there, it doesn't really matter in the bigger picture when we're capturing big moves like this. And trend trading, as the saying goes, the trend is your friend. So high wave candlestick pattern, simple as that. There's another example if I just zoom in here. Okay, see the long wicks, long upper, long lower wick. Same thing, we can just trade a breakout in the direction of the trend. Obviously, we're not looking to sell because we're in an uptrend, so we can buy there. You can have, it doesn't necessarily need to be a bullish candle. Like here, you have a high wave, which is actually bearish, still acted as a good potential entry point into this trend. Okay, and you want to avoid obviously buying too high. When you zoom out and you can see we've already had this move, you probably don't want to be taking high waves too late in the day. That being said, it's perhaps arguably a debatable high wave there, and a breakout to the upside with the stop loss below the low there is still a decent trade. So ample opportunities with these high wave patterns to capture a good part of this move. We only take them, or I would only take them in trending markets. Okay, I'm not going to take them in a ranging market simply because you can just get whipsawed in and out of the market. Okay, and another thing I say is I don't necessarily need to have a high wave pattern to confirm a trade. I mean, I would quite happily have just traded this breakout of resistance, that one. This one, arguably, I would have been looking at this level here. Okay, you see this resistance, pullback, resistance, breakout, resistance, comes support, continuation. Okay, and also rather than using the top of the high wave pattern, I would have been quite happy in this instance using this resistance level here, and then you have this resistance become support and a continuation. Same up here. They do say use the high of the high wave pattern, but I wouldn't always include the wicks. I'd be quite happy if I can see strong resistance there and resistance there to use the candle body, and then resistance becomes support, a nice continuation there. Okay, in fact, same on this instance as well. Can ignore the wicks, in my opinion, and could have traded a nice breakout there as well. Okay, And as I said, there doesn't necessarily need to be a high wave pattern to take a breakout trade within the trend. You know, one may argue that we have a nice breakout here. Despite being late on this move, you don't want to buy too high, but we still could have taken a trade there, although you may notice a high wave pattern within there in any case. Okay, so that's in an uptrend. In a downtrend, the principle is the same. You just look for your high wave. So trend direction, downtrend, got a high wave here. You can just mark the low. Could have traded that breakout there. Okay, is that in fact one here as well? You can see these long wicks. Could have traded that breakout there. This is a strong level of support. That comes resistance, continuation afterwards. That was the first obvious one in this particular downtrend. Or arguably this one as well. This candle here, however, I would have liked to have seen confirmation of a continuation of this trend. It had a nice bearish hanging man pattern there, 3 black crows. Bearish spinning top almost, another bearish hanging man. So lots of bearish price action there. That would have been good confirmation to take this breakout trade here. Had we taken that, currently be, you know, there would have been over 400 pips profit potential. Again, stop loss just above the high. And we can use a trailing stop as price falls down. We can move the stop loss to break even at first instance, and then just use a trailing stop above the high, above the high, above the high, and just lock in profit on the way down. You can close part of the position as well, just to bank some pips. But again, you can see numerous opportunities. Once we determine the direction of the trend, you just look for these high wave patterns. So there's one nice, ties in nicely with support there as well. This one back here was a good support level. Okay, but you can see here there's no obvious high wave, and I would have comfortably taken that breakout trade, which goes to show you don't always need the high wave pattern to take a trade. However, it could be good confirmation if you are thinking about taking a position. But I wouldn't not take a position if there wasn't a high wave pattern. I could just draw a line of support like that, see that the market is clearly making lower highs, got a wedge formation there and a breakout to the downside. So I would have been confident taking that trade. We also had this bearish inverted hammer, 3 inside down candlestick pattern there as well, 3 inside down candlestick pattern there. So lots of bearish, other bearish indications as well. If you notice, no fancy technical indicators needed for this. Just good price action trading, support resistance, trend lines, candlestick patterns, and good money management. You know, you can create a solid trading strategy that way. You don't need to rely on unicorn crystal ball magic indicators that claim to be 100% correct. If you're using higher chart timeframes, like this is a 4-hour chart, pound dollar MT4 platform, I find higher chart timeframes tend to give more reliable signals. Okay, they filter out a lot of the noise that you see in the smaller chart timeframes. And when we capture like big moves like this for, you know, hundreds and hundreds of pips within a month, I'm not sure why you'd want to scalp, pull your hair up trying to scalp the 1 minute, 5 minute charts all day for a few pips and endlessly paying your broker fees, spreads, commission, slippage, etc. And just less time chart watching. I mean, you could have, you know, it's a 4-hour chart. You can just check the chart every 4 hours, or, you know, not even that often. You know, once a day if you like. There's always going to be opportunities, especially you can use this strategy on any trading instruments, so Forex, stocks, commodities, cryptos, indices, etc. And any chart time frame. So you'll always find an opportunity. Just don't force trades, don't FOMO, fear of missing out, don't revenge trade, don't overtrade, and you know, don't let fear, anger, and greed cloud your trading decisions. Okay, so high wave candlestick pattern. The key is determining the trend direction and looking to time your entry into the trend based on a breakout of support or resistance. Okay. Just an example of a trade not to take. See this high wave here? You mark the low of that. You wouldn't want to be trading a breakout of that low there simply because there's already been this big move here. Okay, so you'd want to wait for a pullback first, like this pullback we're kind of seeing now, and just then watch how things play out later on. But by now we may already be looking at another level of support around here somewhere, and the market still making lower highs. It'd be interesting to see how this particular scenario plays out. Okay, thanks for watching. Hopefully you found something useful in this video. If you can like and subscribe, that would be great, and I hope to catch you on the next one. Take care.